Today, maxed out investor stress mapping. Hi again, it's Martin North from Digital Finance Analytics, well, this post covering finance and property news. Well, this is the third in a series of posts relating to my analysis published just over a week ago, looking at the households. And the original show, of course, focused in on mortgages, and the posts that we did previously focused in on the rental stress. But today, we're going to look at the other side of the coin, investor stress. And investor stress, of course, is a significant factor that we measure. We look at it in cash flow terms, money in, money out, and we also take account of whether investors are trying to sell their properties. And we've seen quite a few properties in and around Melbourne coming on the market. Net investment yields are pretty weak at the moment, particularly in the Victorian region. And as a result, investors are jumping ship. So let's look at the data and try and understand what's going on. We start by looking at the summaries page across the states. And you can see there that we have just over 488,000 stressed investors. That's about 16.7% of those who are offering their properties on the rental market. So it's not a big factor compared with, for example, the rental stress at 77% or more than 2.3 million households, but it's still quite significant. And if you look at it in a segmented fashion, it's interesting that both the exclusive professionals and importantly, the young affluents, who tend to have a greater mix of investment properties, are also highly stressed relative to some other sectors. Now, what I'm going to do for each state is to look at the stress mapping for investment and also look at the net investment yield so that we can make some direct comparisons. And to be clear, whilst many people focus in on the gross investment yield, which is the comparison between the price of the property if you were to buy it and the theoretical rental that you got if you were able to rent it. That's not a very useful measure. We look at it in cash flow terms, money in, money out, and specifically take account of the interest on a mortgage, maintenance, repairs, and even things like the management fees that need to be paid if you've got an agent managing your property. So that's a much more realistic view of the cash flow perspective, but we don't include capital appreciation. And I would accept that some people in the investment sector are happy to wear a loss because they can write off against tax on the assumption that they're going to make capital gains when they choose to sell. Whether that's true or not, of course, is an open question. But when I talk to people in my one-to-one conversations about this, many people have no real feel of what the story is about their investment properties in cash flow terms, and I think it's pretty important. So let's start by just looking at the overall summary for stressed investors. You can see there that postcode 6163 over in Sampton, Western Australia, has the highest count, actually with around 22% of investors stressed, and then Toowoomba with 24%, 4350, and it's worth noting that equates to about 2,600 households. Then Cranbourne in Victoria, 3977. Riverstone in New South Wales at 2765 with just over 2,270. And that's about 20% of those in the investment sector. Then we have Wentworthville, 2145. That includes Westmead. Then we had Chatswood, 2067 with just over 2,000 or 47%. And then Queanbeyan, 2620. in and around the ACT with 1,900. And then Bundaberg, 4670, Wyong, 2259, Central Coast, Southport in Queensland, 4215, and then Marsfield and Eastwood in New South Wales, and Hornsby, 2077, again in New South Wales, and then Paradise Point and Runaway Bay, 4216, with 1,752 stressed investors at 27% of those investing. So let's start by looking specifically at the story in New South Wales and particularly around Sydney. And here you can see that postcode 2765 in and around Blacktown really stands out, as well as around the Parramatta area, 2153 and 2145. Closer in, We have a couple of other areas too, if you look around Bayside and close to those areas, and also places like Lane Cove and Willoughby and Ryde and up towards Hornsby. So the point I want to make here is that the stressed investor story is not just concentrated in the CBD, but it spills out into some of the other areas, including those towards the west, but not only so. If we then turn to the net investment yield for the same areas, you can see there that 2765 actually had a positive yield, but nevertheless, there was still some struggling. And it's interesting to note that there are quite a few areas in and around Sydney with a negative investment yield. The darker red is minus 1.4% and below, the lighter red 1.4 to 0.8% below, and we grade into the blues. So from a cash flow perspective, there are vast swathes of Sydney where investors are losing money, hoping, I suppose, for capital appreciation. If I then switch to the story in Melbourne, postcode 3977 stands out as the centre of issues, but you can also see there that there are other areas, and not only in and around CBD, but also in some of the urban and rural areas too. Looking at the net investment yield, there are some high points in and around Victoria where returns are above 0.5%, but the truth is that in and around Melbourne, most property investors are underwater, some severely so, with more than 1.4% underwater. That means people are going backwards in cash flow terms. And of course, in the Victorian context, there's no capital appreciation at the moment, which creates a problem and explains why many people are selling. Turning to Brisbane, we can see there that Toowoomba stands out, 4350, as a real hotspot with a lot of stressed investors. Closer into Brisbane, there are some, but it doesn't have the same concentration. The people density is a bit lower, of course, as well, which helps. Looking at the net investment returns, well, you can see there that in and around Brisbane, there are areas with pretty good returns, well above the 0.5%. And whilst that is true for some areas, there are swathes in and around Ipswich and even across towards Toowoomba, where it's still negative too, where people are underwater. And the general observation is that because of the problem with cash flow and rentals, actually more people are finding it difficult to lift their rents higher than previously. And that's putting more pressure on investors. So my expectation is that we will see more investors struggling ahead. Going across to the Adelaide region, again, the people density is a lot lower. As a result of that, and the fact that the rents are still quite high relative to property prices even now, the overall level of stressed investors is pretty low. Looking at the investment returns, though, you can see there that there are quite a few nice hotspots where 0.5% and above can be found. Nevertheless, there are areas like Mount Barker that is actually looking a bit more sick, and areas like 5019 and 5114 where there are significant losses on the net cash flow basis. So it does show you that you can't bank on every postcode in a particular area. Looking over in Perth, you can see there that 6163 stands out as a significant hotspot. And if you look to the north and the south, there is still a count of people with some difficulty. Mandurah, of course, stands out there. We've still got a lot of issues with people who bought property in the mid-2000s and 2010 to 2015 and are underwater still. Nevertheless, there are other areas where returns are pretty positive, as you can see there from the blues, particularly in and around the centre of Perth. And looking at the net investment yields, you can see there that close to the centre of Perth, it's looking pretty good. As you pull further out, there are some hotspots down towards Rockingham, for example, inland from there, and also other areas too, like 6081 and 6082. And looking at Hobart, you can see there that the stressed investor count is relatively low, although close in, there are some investors who are in difficulty. As I highlighted, that matches the stressed issue with regard to rents that we saw previously. Looking at the returns, other than 7025, most people in the Hobart area are still able to get reasonable returns on their investments. Finally, in the ACT, close in, not too many issues, but as you pull out again to the suburban areas, we do see more stressed investors struggling. And of course, there are rent controls in the ACT, which is also putting pressure on quite a few households there. And looking at the net investment returns, whilst there are areas close into the ACT doing okay, there are also quite a few swathes where returns are close to zero or strongly negative as well as you pull out. And I think this tells me that the rental controls that are in place in the ACT are definitely putting more investors under pressure. So there you are. That gives you the rental stress story, both in terms of the net investment yields and also the distribution by postcodes. And of course, these are averages. There are some people who are charging more, others charging less. And my modeling takes account of the average at a postcode level. Next time on this series, we're going to look at financial stress mapping, which of course aggregates the total stress story. That includes mortgage stress, rental stress, investor stress, and overall stress is the sum of all that. And that will give you the final view from our mapping. So check back for that show, which should be up in the next day or so. This is Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.